global equity market has really matured in the last year or so. And so you've seen quite a lot of crypto services companies pop up. And I've spoken about banks so recently on this show with your colleague. Today, I want to mention a couple of Bitcoin miners which have matured, listed on the Nasdaq. One of them is called Marathon. The other one is called Riot. It's interesting. You can apply the same framework to crypto mining or Bitcoin mining as you can to traditional mining in a way. What's the production profile? What's the capex? What's the all-in sustaining cost? Is there sort of jurisdiction risk? What's the infrastructure like? So, we ask all these questions and we've built a framework around that. Marathon's a very interesting one. Some viewers may know it because if it's famous chairman Michael Saylor, who runs MicroStrategy, who's literally deployed billions of dollars of capital into buying BTC directly recently. But Marathon itself is just a pure play Bitcoin miner, and we like it because it differentiates itself by only buying the mining rigs. It doesn't get involved in perhaps the more vertically integrated sort of infrastructure side. And so, from a return on capital perspective, that every single dollar is going in towards mining Bitcoin. And the other interesting thing about it, Kara, is they end up holding all their Bitcoin on balance sheet, or should I say hodling. So, if you want pure play exposure to the BTC price, this is one to look at. I want to say more broadly, and this probably applies to Riot as well, but more broadly, if you look at the Bitcoin price of $47,000 a coin, and you look at the all-in cost to mine a Bitcoin, the gap has, it's really never been wider. It's quite large at the moment. Marathon's all-in cost is around $5,000 US to mine a single Bitcoin. So the margins are very big at the moment, and that's not always going to be the case. But right now, I think it presents an opportunity to look at.